Hello, this is Right Side Trader. Today is May 18th, 2026, and this is a quick trade review. This is all for educational purposes only, no trade recommendation, because as we all know, trading is risky. You can lose money at trading, so please check with your financial advisor. Please check with your significant other, and make sure trading is something that is suitable for you. All right, this is lately here I've been trading, I've been trying to trade, I've been trading, I ain't really trying to trade, I'm trading the SPX, and I am trying to train my brain to trade the 0-day options on the SPX and scalp a little bit of something off of there. I'm seeing things here. I've been recording things, and I started saying and I think I've done it before, put a recording out of one of my trades before and all. And those of you who've been following me trading the Qs, you know, if you watch things here, if you learn by example, you know you will pick up some things here. I like using pivots. I like using levels in the market, and all because they seem to work pretty good for me. And there's a reason why I believe that they work pretty good, because they are set levels. Set levels are easy for computers to actually see, for people to actually see. You know, moving averages, they are moving averages. You cannot predict or know exactly where they're going to be at a time. You would have to have well, these days they do have smart enough programs to actually maybe trade off of those things too. But the pivots, the levels are very easy for me to see and trade off of. So you'll see me using those and talking about those quite a bit. All right, but let's take a look at the trade that I did this morning, and I might do another quick trade right here because I see the setup. The setup already kind of is happening right now to take a trade on these right here. One of the things that I've noticed that I want to do 0-day option, and I will do a quick trade right here because it is giving me my setup. You see my 5-minute chart, and you saw my 2-minute chart. I'm getting confirmation right now on my 5-minute chart, so I'll take that trade. That's what I look for, and I like trading right at the money. I'm going to go ahead and maximize this chart here and all, where I can see the option chain, and I'm gonna go ahead and buy this. And what I'm gonna do, I'm gonna buy it at my normal position size that I like, the 10 contracts, and I'm gonna go ahead and throw that out there. I hope I'm in the right account. And let's see where we got in at. And then I'm going to go ahead and talk a little bit. I did get in at 1530. That's where I was trying to get in at. And this trade is already over with what I like trying to do on here. All I like trying to do, like I had said to one guy before, is just make $1 on these trades. Making $1 on these trades is actually really pretty good money for me. And I'm not greedy. I'll take $1 every day and all. So this trade might be over here in a second, and it is over already, and because that was a good trade. Now, what I was looking at, and let's go back here. The trade is done, and that's the whole thing. That's why, again, it's hard for me to trade with people. I'm in and out of my trades just that quick. I'm not trying to trade it all the way back where it can go, where it should go. Nobody knows where it should go. But well, yes, it can go here, it can go there, it can do anything. But if I think I can pull $1 out of a trade, I'm okay with that, and I'm good with that. And I'll show you just in a minute what that dollar means in real money. And this is a virtual trade, but this is what I do. I'm trying to do this pretty consistent every day now, and it's been working out pretty good. This morning trade, though, let's back up to that. I'm going to back up to that right now. What are you looking at is a 2-minute chart and a 5-minute chart. These are the 2 time frames that I've got kind of comfortable trading with, and I'm usually looking at my option chain where the option prices are at and how they are fluctuating. That's what I was looking. That's why I had to go to maximum string where I can see what was happening there on the options. I saw that the option I had already was glancing at it. I had already saw that drop down below 15 and was back at a low 15. So that's why I want to get into that trade like right away, right now, because I know from that 50, the way these options jump around, it could have jumped from that 15 to 16 like right now. That's how these options jump out here on this thing right these days, and all on the SPX. But this morning, what I was looking at on my 5-minute chart, I saw I had a red candle down. We're still in a bull market, even though we're trading near top hit all-time highs again last week. But so the market tends to, if I get a red candle down that first 5 minutes, I do what I call, just like on the Qs, I do what I call my next best play. I wait for that market to come down to a low point, an expected low point, or a point where this market may turn around. Don't know, nothing is definitely, but that's why I have my levels on here. This green level, let me bring up my little marker. and all. This green level here is what I call my L1. This level is pretty consistent. This level, actually, this green level adjusts for whatever product that I'm on. It's a range for that product. It's a typical range for that. It's a calculated typical range for that product to drop. So that's what that is. You can figure out the math. You can do it yourself if you want to. A good friend of mine who's no longer with us, he did this for me. We did this right after we first kind of met. He realized I kind of like levels in the market, and I kind of explained to him what I was looking for, and we kind of like he played around with his numbers and what I think I want to see in the time period that I wanted, and all. And we came up with this, and we found out it works pretty good, and all. So it's something that I use day in and day out. And that's this line right here. This is what I call my L1. This line right here is the opening line. This line right here is what I call my H1. It's the high level where the market usually goes. And there's a H2 and there's a L2. This line right here, this should be my previous day low line, and then there should be a previous day high line somewhere on here, and that's it right up there. It's the blue line. That's my previous day high line. Those are the lines that I've calculated, and then these other lines, let me clear all that up. These other lines on here are just your normal SPE pivots. I like the SPE pivots and all. That was your resistance one line, this line up here. This is your support one line, and this is your central pivot line right here, this white line. So based on my trading strategies and all, what I like looking at when I look at having these levels, it's kind of like when the market opened, it opened below pivot. So I get a red candle, I kind of expect it to stay below pivot for a little while. And all. So again, that's why I say I'll wait for my next best play if I want to take a bullish trade. So once it's below pivot, it could have been a downward trade. Somebody could have took a downward trade and you would have probably made $1 on that to the downside. But me, I usually pass on that. Me knowing that we are in a bull market, I do expect a pop to the upside where they're going to have to buy it and cover that stuff right in the beginning of the market opening. Usually, not all the time. Nothing is guaranteed to happen 100% of the time, but this happens quite often. What happened this morning, I got where I could see I had what we got here. We got a bullish Harami on a 5-minute chart. Nothing's guaranteed. We ended up getting a red candle, next one, a drop. Then we finally, you kind of, just like on your longer term pictures, you kind of after seeing a bullish pattern, long as it doesn't give you a confirmation, long as it doesn't wipe it completely out and you get a confirmation of this thing actually dropping. And on this red candle, we didn't get a confirmation of it actually dropping. The next candle was a green candle on this 5-minute chart and all. And then we got I got in my trade just like what you just saw on the real thing and all, and I'm out of my trade just that quick. That's the way I scalp the market right there in a nutshell and all, and that's what I'm trying to do day in and day out. Sometimes, most of the times, it's that quick, but at times it can take all day to get out of your trade. Sometimes the market gets where it's going sideways and not doing anything, and playing these 0-day options, that can be a killer. And that's why on the Qs I end up giving myself more time. On these, it's all about trying to time that entry and get that entry right and all. So back to this morning, this is what you saw on this time frame. Back on my 2-minute time frame, let me clear all this up. This is what I was seeing. I was seeing this bullish buying pressure, Then I saw this green doji with a higher low. So I'm in this trade. Right now. That's just me and my bullish thing. And my first 5 minutes, I was red. Then my second 5 minutes back over here, I can see I'm green. I think I'm okay. But then I get another red candle. This stuff right here ended up getting me almost $2 down on my trade. And then I came back. I was getting back where I thought I was close to breaking even. I actually added a little bit more when I came down here to previous day low. Because again, I still kind of think this is another place where the market gets down here to a previous day low and you still believe that it's bullish and you're going to get a pop. I added to my trade. That's just me, and that's again why being trading with someone else, they may not think that was a good idea and all, but based on my experience and based on what I've seen, I will do this at times. All the times I will not do this, but today was one of those days where I was kind of expecting a pop because the market was already up quite a bit and all. it was up on the Qs. It was up $4. So the Qs were already up a little bit. I was expecting this to be able to pull back up, so I added. So then, once that happened, I took a little scalp on that second trade that I put in, and it made about $2 or something like that, a little over $1, So I took that off, and then I said, okay, I'm gonna ride the rest up to my original exit where I wanted to get out at. I didn't move my exit down or try to move it down. I just left my exit up wherever it was set at the time. And by the time the market got back up here, I was out of the rest of my trade. And again, as you can see, all I'm looking at, I do use other indicators that kind of let me know, yes, the market is at a oversold point, and I'm expecting the market to turn back up. But again, with any indicators, nothing is guaranteed. That's why I kind of focus on my day trading. I focus on the candles and the candle patterns that I'm seeing. I see the market is dropping. I can see the market is kind of leveling out. I can see the market look like it is trying to probably head back up, and I'm out of my trade. And that's pretty much it. That's what I kind of expect, and kind of the way I'm looking at the market and thinking about what I see. Now I'll show you one other little thing here right quick. I am going to jump over to to an option chart. Let me show you one other little thing. Control V. This is the contract that I was actually trading. Let me zoom in here. You see a lot of other little mess there, which is no big deal. And that's the other stuff that you're seeing on here. It's still just moving average, and that's a VWAP line that you see on this chart. And that's a theoretical price line that's on here and stuff. And this is that trade that you saw me take at the beginning of the video. That was this right here. That was it coming down to a support 1 line and bouncing. That's something, again, that I'm looking at. Things seem to happen the same way all over the place. Once you get used to watching this stuff and seeing this stuff, and it comes where it's not that difficult and all. But you have to know when is it going to be good and when is it not going to be good. The first time, as I told one of the other traders that did trade with me for a while, and we still stay in touch. The first time is usually the best time when you see one of these things coming to one of these indicator lines like this, and one of these pivot points, and all. So that was a good trade. This is the trade that I actually took this morning. Like I said, I got in a little higher than that though. Seemed like the option prices were higher than that. And I know I never did get a chance to get out of it. This is what a 5-minute chart. So I got in this trade. Like I said, it was over $12, and that wasn't it. I didn't remember it going down that low. Oh, yes, I do. I do remember seeing prices go down to $8 or something. So, yes, I got into this thing way up here somewhere and all. It went all the way against me here, and I know I didn't get out. I got out of this thing at $14, though, too. I got out of it $14.20. Yes, $14.20 actually got out of this trade. So I got out of it when it made this pop here and on this candle. And as you can see, it went all the way up to $19. It was $5 more on there, so that was $5,000 more on this trade, that I didn't take, and I'm okay with that, because then I would have been thinking it can go all the way to the top, and then this thing ended up coming all the way down to the bottom, and I don't like using stops, so again, I would have been trying to get myself out of this thing when it pulled back, and still probably would have ended up with the same thing, maybe $1 more than what I actually got, so I'm okay with that. But this is the thing that you can these option charts are not, something that I would actually use. I don't use these for my trading. I just kind of use these to see what's going on with the option prices and option volume. I can see option volume kind of going up. That's why volume is on this chart and all. And I can see, and that, again, that could be sell volume. I don't know, sell or buy or whatever. I can see volume going up, and that's about it. And I can see volume going down. I can just see volume. That's all I can see. And what is that telling me? Sometimes I'm really not sure what it's telling me. I can just see that other people are already going to be playing these 0-day options, so it really doesn't matter that much. But the whole setup back here was this thing. We had a drop base rally. Common pattern in the market and all. And the thing is, you don't know if it's going to be drop base drop or drop base rally, and I just was kind of expecting, a little bit of a pop of a rally. And again, this is a 5-minute candle. Let me get back to where we can see this. Minus, 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 and let's slide back a little bit where we see the opening of the day. As you can see, it did go up a little bit higher, quite a bit higher and all, but it went right back down to where it came from and all. So that's why, again, there's a lot more usually in the trades that I'm actually doing, and I'm kind of like still saying I'm beginning to see that, but I don't want to take any. I'd rather take the higher probability of me just making $1 than trying to make $2, $3, $4, $5 on these trades. And $5 is the ideal point. $5 because $5,000 a day would get me to that $1 million a year actually trading this thing. And that's what I did with the spread trades. The spread trades and selling the stuff is a whole lot easier, I think, than doing the directional thing. Also doing the directional, both, I don't know, it's all according to what you are comfortable with and what fits you. With me, I'm comfortable doing both, and I am doing both and all. So it gets where you got to get to if you're going to do any of this trading stuff, you need to find what fits you and what are you comfortable with and all. And it takes time usually to get comfortable with anything. So it's kind of best for me. I'm the type where I need to practice it and see it, even though it's virtual and all. I kind of get comfortable with the platform and all. Then I get comfortable, how the price action is actually happening, and I get comfortable with how it can go against me, and I get comfortable, how much I can actually make on the trade consistently. So I just kind of take what I can make consistently and be okay with that, and that's just where I'm at now. I'm at that point where I know what I can take on these trades consistently, and I'm okay with that. It's kind of like on that spread trade, taking 60, 70 cents on that spread trade. I knew I could do that consistently. On this trade right here, even though I can see that there was $5 in this trade, but I know I can take $1 consistently, and I'm $1 or a little bit more than $1 consistently, and I'm okay with that. And that's where I'm at, and that's what you have to do. You have to find out what fits you, what you think you can take on a trade consistently so you can be consistently profitable, and that's what it's all about. It's just about keeping those losses small and keeping those profits coming. And that's all I got to share today. This is Right Side Trader. Hope this is being helpful to some, and I'll talk to you guys later. Have a good one. Bye. Hello, Right Side Trader. I said I was going to show you, I don't know if this continued or not, and I said I was going to show you what that dollar means in real money. Let's minimize this. Let's go to this screen here, and we need to go to our monitor tab. Monitor tab. I only done that one trade today. Oh, and that trade is still open. That trade should be closed. That trade should be closed. What is open? Nothing is open. I gotta put spread on. That's why I got that. Where I sold the put spread, that's what's open, that's what's going. That's why I was kind of like, what's going on here? Oh, and I only did, that trade should be here still. Where's that trade? Here it is, right here. That dollar that I made on that trade is right here, is $1,000. If you're making $1 a little bit more, it's $1,000 or a little bit more, minus any commissions that you may have. But that's it. That's all I really want to share. I said I want to show that, and that's it. That's all. That's it. That's it. That's it. That's it. And as you can see, I've already, this virtual account, I just about doubled it. I'm looking to double my live account also. I'm getting back to that point where I make 100% or more in my account. But I just kind of started in one of them here this month. The other ones, one of them is on track because I know it's around 30 or 40%, and I know they're around 30 or 40%, and also they're on track. Everybody is on track right now at this time. So let's just keep this bull market going, and that's it. Don't get us where we have to sit on the sideline, because that's what I do when things start looking like they're going to turn down. That's it. This is Right Side Trader. Hope you guys are having a great day. Hope you guys have a great week. I'll talk to you next week. Have a good one. Bye.